Hi everyone and welcome to this week's market commentary. Hope you've had a fantastic weekend and had a great trading week. I want to thank everyone that came along this weekend to the price analysis workshop. It was a fantastic couple of days and it really excites me when I see the progress that people make just in those 2 days alone, from when they first arrive with their analysis to when they finally leave on the Sunday night, having much better clarity over the charts, the markets and the price analysis. And I look forward to working with those that have attended over the coming weeks to really cement that in place moving forward. So thanks very much, and it was a tremendous weekend. Now, in this week's market commentary, we're going to follow up on what we covered last week. And if you remember, we looked at the gap that happened on gold. So I just want to recap on that and actually show where there has been some opportunity last week on that. We'll take a look at the American markets and just see where they're at and if there's anything from an opportunity point that may come up in the following week. I want to take a look at crude because crude is really on the table for some potential opportunity. So we want to be vigilant because it could move quite quickly. So we want to be alert for that. And lastly, I'm going to show you a trade that I've not taken. The reason I want to show you is just so you can understand why I've not taken it. And actually, in some respects, it's showing that that was the right choice because it didn't do what I needed it to do. And then obviously it's not working out. So it's good to show you both sides of the coin. Now, if we start then with gold, on gold, if you remember, we discussed this gap that happened on the Sunday night, and because of what we trade, gaps are not that common. So when they do happen as big as that, you get maybe the odd little one over a weekend, but it's rare to see big ones like that. So what's quite often the case, as we discussed in the last commentary, is it's very common for gaps to fill. So when I was doing my commentary last week, price would have been maybe up around about here, and obviously since then that gap has then filled. So by the Wednesday, that gap had filled. It actually happened during one of my afternoon sessions in the trading room. Now, the reason it's really interesting is, firstly, as a rule of thumb, it's very common for gaps of that size to fill. And as I had highlighted last week, is I had been looking for a potential breakout trade intraday wise, but I hadn't taken it, in part because of the bank holiday, but also in part because of that gap. And that's obviously proven to be an effective decision. But interestingly, it's then loaded up from a point of view that's created opportunity, because what we can see is initially price broke down and it's then pulled back, it's then continued down, and then the trend's kind of failed, or it's gone into another kind of descending triangle, which is then broken down. So there was actually a few nice opportunities to be able to trade the fill of the gap, and it's not the first time I've done that. It's a very effective thing to do, but it's just not that often that you get it. So you need a little bit more of price analysis, a bit more discretion to be able to trade it, and it's worked out really nicely. So if you ever see these sort of gaps over the weekend, because obviously when the market's open on a Sunday night, if you see gaps of that size, and as I say, they don't happen that often, but just be wary about trading the continuation of the move until the gap is filled. So with gold now, can we get back up to these highs? We'll see what happens over the coming week. And maybe we can get back to these highs, then we could start looking for some possible long opportunities. The short side on gold doesn't look great, and even the long, I would be more inclined to look at it from a day trade because we do have quite a few different levels in the way for a swing opportunity. Now, going on to the American markets, if we just take an updated look at the Dow, interestingly, one of the things that I have been highlighting was, could we break these levels here for a potential and proper new downtrend, and it's not happened. So initially we were looking at this slight lower high, and the one thing I said was it was only slight, so that gives me a slight bearish bias. But what I really needed to see was price come down. That's not happened. So what will be interesting now this week is, do we come back up to this high? And if so, could we look for a possible break long? I'm less keen to take the reversal at this level because we do have traffic that could prevent and create some challenges for that working out. Alternatively, if price can come back down, I really want to see this level broken. So either maybe look for a minor consolidation for the breakout, or if it just simply breaks down, we could look for the pullback. So at the moment, we're not at a great place, but we could quickly get to these levels. So we need to stay vigilant for when that happens, so we're ready to take action. If we just take a look at the Nasdaq's almost identical. The Nasdaq again didn't quite manage to break those reversal candles, didn't manage, it was showing some real signs. That was on the 3rd of April, but ever since then and last week we've just rallied up. But again, we're in the middle of the consolidation, and this one is a little bit tidier than the Dow. So again, if it can come back up here, with that then being the 3rd hit, there is a possibility we might be able to look for a breakout long on that one. So we'll see what happens. Now, crude looks really interesting right at the moment because we've been building up a bit of pressure. We've been basically going sideways. So after that massive sell-off, we've been going sideways all of this year so far, but we are back at these highs, or very, very close to these highs, which is approximately 5,430. So what we're really looking to see now is, can we do some form of a consolidation breakout, and can that then potentially lead into the pullback opportunity? So from that perspective, the first demand I'm going to have is a move up to this level, and then I want to see a bit of a bounce to complete the consolidation, and then I can look for the breakout. Alternatively, if price simply breaks out, I could then look for the pullback into that previous level to go long. So it's at a very key area, so we really need to be vigilant and watch that, make sure we've got our alerts there, so if it gets back to that level, we can take action. As far as the downside goes, I'm not really interested. There's a lot of levels, and one of the worst places to try and trade is within the middle of a consolidation, so I'm not really interested in the downside at this moment. And then just to finish this week's commentary, I'm going to pull up United States dollar versus Singapore dollar. Now, the reason that this one's really interesting is I had been watching this for a possible swing opportunity. So what I was looking for was price to get back down to these lows here and to consolidate. And it was initially doing it and it popped up. So what I told people in the room, and we discussed it in the trading room, is I'd like to see a little bounce here and then I would take the breakout. That didn't happen, and we simply broke through. Now, if you can imagine, when you start to see price moving down, if you think of the psychology, that actually moved down quite a nice number of points. It maximumed out at about 125 points is what it moved down. But sometimes when you see that, you can feel like you've missed out on an opportunity, that it's done a move and you've not been able to get involved, and that can get frustrating, which can then sometimes lead to you jumping into trades or being hasty, or even doing some form of revenge trading or whatever. Now, the reason I want to highlight this one is, although at this stage, if I was trading this, my stop would be higher than where we are right now, the way that we've broken down and then pushed back up is an illustration of why I look for the consolidation. So for instance, as I said, I wanted the bounce here to then break down, but because it broke down in one go, if you actually look at the legs when this market does certain moves, what you'll start to notice is that leg there was roughly about what we tend to see before we pull back. So the problem that we had with this one is, because I didn't get the consolidation, it quickly ran out of steam, which is why I look for the consolidation at the key level. Because I never got that, I never took the trade. Now, we also discussed, was there subsequent opportunity? Well, yes, there was, but I would have needed another consolidation. So sometimes it does break the area, then it starts to consolidate. That didn't happen, so again, there was no trade. And at this moment in time, I'm glad I'm not in this trade, even although it wouldn't have hit my stop, because there's often the expression, you'd prefer to be sitting out wishing you were in than being in the trade wishing you were out, and that's exactly this situation. I'm glad I'm not in this trade, but it's my analysis experience, price analysis and strategy that have kept me safe. So it's good at looking at both options. Obviously, we're always looking for options and tradable opportunities, but it's important to also see when something or why something isn't as high probability and why I wouldn't trade it. Okay, so that's us for this week's commentary. Thanks again for those that attended at the weekend. I look forward to seeing you in the room this coming week, for those that are room members, both who were there and for everyone else. For the rest of you, have a fantastic trading week, and I'll see you in next week's commentary. Bye for now.